Hi everyone, welcome back. JJ here. Well, today I'm going to react to Tom Lee from Fundstrat. He's an Uber bull on the market pretty much all the time. Well, that's what Uber bull is. A perma bull, really, not an Uber bull. And what he's saying today is buying at new highs has a better win ratio than attempting to buy at lows. So let's see what Tom Lee's got to say. I'll just take that back to the beginning.
My next guest says stocks have risen in June for the right reasons, softer than expected inflation, and he is seeing more positive signs ahead, and he's sticking with the big names in AI. Tom Lee is here. He's Fundstrat Global Advisors co-founder, managing partner, and head of research, and he's a CNBC contributor. It's great to see you.
Yeah.
I want to start in a little bit different way than normal because Doug just made a really interesting point about millennials and how they're so conservative in their position.
So the headline there, tech overbought and oversold. Well, which is it? Tech overbought and oversold? Can it be both at the same time? Well, we've got Nvidia that's come down 10% just in this last trading session of the week after rising $1 trillion in just a few weeks since the split, which is just absolutely incredible. I mean, that's the history of the stock market. It's history in the making there.
Positions. And whether you've experienced this phenomenon firsthand or not, what do you say to those who need to be coaxed into a market that is ever at record highs after a run in stocks like Nvidia, like we've rarely before seen? I mean, is the water still safe?
I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyway.
Mid-cycle. So he's calling mid-cycle. He thinks that this, tech boom, this tech rally is going to go on for years yet. And on these shows, they do have people from both sides, but there are a lot of people. And I just saw a news item, which I'm not sure I'll react to. I might do, where retail investors are actually pretty optimistic. They're actually getting in. So I'm not sure what he's saying is correct here. That cautiously optimistic, a lot of people are, and then really optimistic, and it's nearly up to 60% of people in both of those categories.
Anyways, and I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up. So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, I'm sure you've seen it, that says, oh, we're going to have permanently lower stock returns now. 4% a year is the most you should expect and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right.
And stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
Mm-hmm. So is Nvidia the thing that you look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
There's a lot of people trying to top tick Nvidia, saying that they don't want to own it because it's expensive, but it's a 30 PE stock that sells something that no one else actually.
It's not at a 30 PE right now, I don't think. I think it's more than that. Trailing PE, he's talking about probably forward PE. But then, these industries have been cyclical, so is it going to be the same? And then, we see a time when it pulls back, when the customers kind of run out because they are the mega techs, the US mega techs, and there's a lot of hype around it. I mean, as I said, it has dropped back 10%, but it has been going up multiple percents every day for a long time. And as I said, adding $1 trillion of market cap, and even in percentage terms, that's a huge amount just in the last few weeks. I mean, was it due for a pullback? Your guess is as good as mine, but it's not surprising.
Actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if if we were discounting Nvidia being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped. But because everyone wants to sell Nvidia and try to call a top, I actually think there's still a lot of upside.
When I hear
it's not this, but that's not what's happening. People aren't selling Nvidia. I mean, it's gone down 10%, but that's people aren't. There's only a few people saying sell. I mean, Stan Druckenmiller, super investor Stan Druckenmiller, has been bullish. He did say it was at nosebleed levels last year, although earnings were very good after that. But he sold like 72% of his stake. And there have been other investors, Christopher Bloomstrand, who is, knows a lot about Berkshire Hathaway. has been warning that these Mag 7 stocks are overvalued. So there's definitely two camps here. Tom Lee's in the Super Bowl camp. And as for buying at high prices, that works. It does work in a bullish market, and there has been a bull market really since 2009. He mentioned 2008, but the bottom of the market was 2009. There have been a few bear markets along the way, short ones, it has to be said. But if you look at the wealthiest investors in the world, like Warren Buffett, they do not generally buy at the highest prices. Not investment advice, by the way. What it's saying here is just for entertainment and general education purposes. It's not a recommendation, not a recommendation to buy or sell anything. You need to do your own research on that and get a professional investment advice.
Your anecdotes, like I heard at a fundraising thing the other night about how all the local kids own NVIDIA. What should I think when I hear that kind of information?
Well, it makes sense. I mean, NVIDIA is the largest stock, so everyone should own it. It's almost like if someone said, I'm selling...
Everyone should own it. He's giving advice there that you should own it.
Because everyone owns the S&P. Everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down. And I only hear people saying the S&P's topping right now.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction.
That was during 2001, during that emerging tech bubble. Stonks never go down was the meme, but people did take that quite seriously.
Couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
To an extent. I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise rate.
And that's true. The interest rates did go up and those emerging tech stocks did get a shock. They were trading at really high multiples, like 50 times. And NVIDIA is definitely getting up there in terms of price to sales, for instance, and then sales could pull back. It's inevitable at some point in a cyclical part of industry, or is it different this time? However, he is pretty bullish on the whole market, and it is true that the market seems to have got used to higher rates. It was a big shock to begin with, but the market seems to have got used to it, and inflation has been coming down. So if the Fed does cut, and now we're expecting 6 cuts this year, and now people are talking about 1 before the end of the year, perhaps in December. So we'll have to see what happens. But interesting times anyway. As I said, no investment recommendations one way or the other. But it's interesting to see what people say one way or the other. Tom Lee is a perma bull, it has to be said. All right, thanks for joining me in this one. And I'm going to put a link on the screen to what YouTube thinks that you should watch next. So go and do that if you want to. And see you in the next one.